Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Goldwind Science and Technology Co. Limited Annual Report. Goldwind Science and Technology Co. Limited provides a wide range of businesses and services related to wind power solutions. The company's main offerings include the research, development, manufacture, and sale of wind turbine generators and components. This segment is part of its wind turbine generator manufacturing and sale division. In addition to manufacturing and sales, Goldwind also offers technical services, including investment, development, sale, and operation of wind farms. These wind farms provide wind power generation services through the company's own facilities. The company also engages in the construction, warranty, and asset management of wind power projects. Furthermore, Goldwind provides various other services such as supply of wind power equipment and accessories, development and operation of solar power generation projects, energy storage business, and financial leasing business. These diverse offerings make Goldwind a comprehensive provider of renewable energy solutions. The company's operations are divided into four main segments: wind turbine generator manufacturing and sale, wind power services, wind farm development, and others. This structure allows Goldwind to effectively manage its various businesses and services while maintaining a strong focus on innovation and customer satisfaction. Goldwind Science and Technology Co. Limited, market capitalization of $110 billion, is significantly larger than the average industry peer of roughly $16 billion. This shows that Goldwind Science and Technology Co. Limited holds a significant advantage in their industry. Goldwind Science and Technology Co. Limited trades at a higher price-to-earnings ratio of 20 times and a lower price-to-book ratio of 1.06 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 74% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a review of the company's performance in various segments. Revenue growth is primarily driven by the WTG manufacturing and sales segment, which saw a significant increase of plus 46.98% year-over-year, YoY. This growth was fueled by an expansion in sales capacity, particularly for units with 6 MW 10 MW capacities. Additionally, the wind power services segment experienced a modest growth of plus 3.79%, driven by post-warranty service revenue growth. The company's international business also played a crucial role in driving revenue growth, with overseas orders on hand increasing by 31.83% YoY, and international business revenue growing by 50.95% YoY. Furthermore, the expansion into new markets such as Europe, the United States, and Australia contributed to this growth. On the other hand, revenue decline was observed in the wind farm development segment, which saw a significant drop of minus 19.9%. The others segment also experienced a decline of minus 5.45%. These declines highlight areas where the company needs to focus on improving performance and increasing revenue. The financial performance of the company has shown a significant improvement in net income and profit margins over the past year. Net income has increased by 32.7% from RMB 7,716,757 to RMB 10,239,890, indicating a substantial growth in revenue. The wind power service business has also contributed to this increase, with a 13.63% YoY growth. the company's profit margins have seen a notable improvement across various segments. The return on investment index has increased by 2.17 percentage points, while the WTG manufacturing and sales segment has seen a rise of 3.97 percentage points in its profit margin. Similarly, the wind farm development segment has experienced a growth of 3.15 percentage points in its profit margin. Additionally, the gross profit margin has also improved by 0.42 percentage points. These improvements in net income and profit margins can be attributed to various factors such as increased revenue from the wind power service business, efficient operations, and effective management strategies. The company's ability to maintain a strong financial performance is a testament to its commitment to delivering value to its stakeholders. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The data provided shows a steady increase in net cash flows from operating activities over the past 2 years. In 2024, the company generated RMB 2,315,846 in positive operating cash flow, which increased to RMB 3,543,479 in 2025. This upward trend suggests that the company's operations are becoming more efficient and profitable. The explicit mention on page 60 of the report further reinforces this conclusion, stating that the company is indeed generating positive operating cash flow. Additionally, the calculation on page 15 confirms this assertion, with net operating cash flow amounting to RMB 2,345,083. Overall, these figures demonstrate a clear trend towards improved financial health and increased profitability for the company. The company's debt level and interest expenses have undergone significant changes between 2024 and 2025. In terms of debt level, the total non-current liabilities increased slightly from RMB 42,923,264 in 2024 to RMB 41,056,679 in 2025. However, the total debt level actually increased by 35.97% over this period, with a notable increase of RMB 17,699.48 million. This suggests that while certain aspects of the company's debt may have decreased, such as interest-bearing bank and other borrowings, the overall debt burden has grown. Regarding interest expenses, there is a clear trend of decrease. Interest paid dropped from RMB 1,271,690,000 in 2024 to RMB 1,074,560,000 in 2025, representing a decline of 13.13%. Finance costs also decreased by RMB 159.7 million and RMB 134.6 million over the same period. These reductions indicate that the company has managed to reduce its interest expenses, likely due to refinancing or other financial strategies. The company's financial performance varied across different segments and regions. On a positive note, the wind turbine generator manufacturing and sales segment performed exceptionally well, generating RMB 57,205,219 in revenue and RMB 2,454,990 in profit before tax. The wind farm development segment also showed strong results, with revenues of RMB 8,693,900 and RMB 10,859,703 and profits before tax of RMB 1,337,390 and RMB 2,369,564 respectively. The company's overseas and offshore operations were another highlight, although specific financial details are not provided. In contrast, the wind power services segment struggled, with revenues of RMB 5,715,538 and RMB 7,655,409 and profits before tax of RMB 503,371 and RMB 535,621 respectively. The others segment, which includes water treatment plants, also underperformed, with a decrease in gross profit margins by 1.69 percentage points. The inconsistent information across pages regarding the performance of some segments highlights the need for further clarification and analysis to understand the company's overall financial health. Management is optimistic about the company's future prospects. The the company has successfully diversified its revenue streams by expanding into global markets while solidifying its domestic presence. This strategic move will enable the company to tap into new opportunities and increase its market share. In terms of strategy, management aims to enhance operational efficiency through integrated energy systems and promote non-electric utilization of renewable energy sources. The company also plans to support large-scale green hydrogen production and provide comprehensive solutions for renewable energy development. These initiatives demonstrate a commitment to sustainability and innovation. Furthermore, the company will continue to drive growth through its dual-drive model, focusing on both energy and chemicals integration. This approach will enable the company to become a world-class service provider of green fuel solutions and expand its operations in green methanol and derivatives. Ultimately, management's vision is for the company to transition towards a light asset service model, reducing costs while increasing efficiency. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying dividends. In fact, the company has proposed and approved dividend payments for both 2024 and 2025. For 2024, the final dividend was RM 4 per each 10 shares, while for 2025, a proposal has been made to pay RM BTW per each 10 shares. In addition to paying dividends, the company has also taken steps to return value to its shareholders through share buybacks. Specifically, in February 2026, the company bought back shares, providing another means of returning value to its investors. There are growing concerns about inventory buildup or supply chain disruption within the company. The data suggests that the cost of sales has seen a significant increase, rising by 29.3% from $48,799,453 to $62,542,561 on page 2. This trend is further exacerbated by the sharp rise in raw materials and components costs, which have increased by 31.45%, page 56. Additionally, selling and distribution expenses have also seen a notable increase of 13.25%, page 57. These increases indicate potential strain on the supply chain, which could lead to inventory buildup if not managed effectively. The company must carefully monitor these trends and take proactive measures to mitigate any disruptions that may arise from these cost escalations. That concludes the financial summary for Goldwind Science and Technology Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.